What's up, guys? It's Thursday. May the 4th be with you. Wanted to do a quick video because we need to be prepared for the recession. This is my YouTube channel. I don't make any money off of this. This is not investment advice. These are my stock picks that I may or may not enter or hold, that I share for educational purposes only and conjecture only. Trading involves risk, and you should consult a professional. Unlike me, I am not a professional trader. I do not get paid by any group to tell you this stuff. Recession in 4 to 5 weeks. Not yet. So we got 1, 2, 3, 4 to 5 weeks. We are here. Let's take a look at this, zoom out a little bit, and we have been talking about for the last 2 weeks, we have lower highs, lower highs, lower highs, lower highs, lower highs. We also have higher lows, higher lows, higher lows. So we don't know. We don't know what's going on, right? But we have an idea. We have an idea because this was support, and that was support, and then it flipped to resistance, and it got weaker and weaker as it went by. Now, these days felt like rip your face off rallies. We got squeezed, we got tricked, right? And we technically put in a higher high there. But until we were back above this trend line, which is getting harder and harder to do, we are still in a bear trend now. This is a bear flag breakdown. So what's the expectation? We talked about in our last video, we talked about Dow Jones in 2008. We talked about it was holding this line, and where to go in all short was to be breaking this area, just like in 2011. If you don't know what I'm talking about, go back and watch that video, the first 5 minutes of it. I'm going to keep this one short. So here's the plan. We officially put in a lower low here, yet we're in a channel. So at the end of the day, I was saying something about like, oh, 398, whatever. Well, the reason I thought that was because when you are in a channel and you're bouncing back and forth, right? If you start going like this to the top of the channel, then you're likely going to break out of the top of the channel. If you're doing like this and we're spending a lot of time in the bottom of the channel, you're likely going to fall out of the bottom of the channel. And that would be extremely bearish for where we are at right now. Zoom out a little bit. You can see that this area was prior resistance, prior resistance. This was a breakout. This was a retest of the breakout, which bounced tremendously, that for some reason I missed. I have no idea how I missed that. So we are retesting that area. We're retesting it, and for the most part, we're holding it right now. So the expectation would be, if we come back down for some reason and bounce there again, our 4070 guy from today, watch for a retest of this side of the channel. If we continue to spend time down here tomorrow, right now we're up a little bit from close because of Apple earnings and stuff, but if we continue to spend time on this side of the channel, look for failure. A couple things I want to talk about as well. I noticed today during market hours, that I hadn't really noticed before. So we still have this breakout area here that we held. We still technically have a breakout area down here at 40.50, and if you swing over here, you see this guy showed up 40.50. So it's very possible that they drop the market tomorrow, and at 40.50 we do get another bounce higher. So keep that in mind. Like I said, we don't know if these are buy orders or sell orders. We assume they're buy orders if they're below price, and we assume they're sell orders if they're above price. So we have 4100 seller. But at the same time, sometimes, like when you're trading shares, you'll put your entry order right here, and you'd say, okay, if we get up there, I'm going to buy shares so that we do break out, and you pull the market up. So this 4100 guy, let's look at here, 4100, he doesn't have to be a seller. He could be a buyer. This guy could be a seller, saying, if I get to 4050, I want to get out. That could be his stop loss, right? So we don't know that either way. But these are your two numbers for tomorrow, 4100 and 4050. We're probably going to bounce between those two tomorrow. And if you see, there's a new guy showed up here at, if I can get this thing to work right. There's a new guy at 4,000, right? So that's also on the table now. So we put a new line. Well, we already had one there, but 4,000. So we got 4050, 4,000, 4100. 50-point moves for a Friday is a pretty big deal. If they get above 4100, we assume they're going to touch this 50 MA again, the upside of the channel, and also 411 SPY, which is what I was kind of thinking we were going to touch today, but we didn't get there. So that could be a sign of weakness. One last thing I want to talk about from here was, I think I erased my stuff. It was at 4070. Basically, here it is. Basically, you had a big buyer come in here and shove the market up here. You had a big buyer here shove the market up. You could really say even to this 4050, 4150 area. So 4070 to 4150 move, 4070 to 4150, right? So what I was expecting today, when this candle came in huge, because it was, it looked monstrous at the time. We had a big candle. This guy came in, and I was like, yep, that was the bottom, right? But then they failed. So it could go either way. But if we do, get back to that 4070, be careful, because they could, rip it back up to that 41, even break out of this channel, and 4155 area. That's kind of what I was expecting. And if you can see this, my little shoe pattern that I talk about all the time. So it looks like a shoe, like a high heel, right? And it kind of curls up and then it starts to take off. That's a legitimate pattern. The only reason I would be hesitant is just because we spent so much time down here. Usually they just curl and they start taking off, and I'm surprised they didn't already. So we'll see what happens tomorrow. That would be the bullish scenario at the moment. I don't really see a really bullish scenario yet. All I see is a squeeze to 4155 possible tomorrow. On the other hand, let's start looking at bear scenario, because I said in 4 to 5 weeks we will have a recession. We're about that time, 4 to 5 weeks, and we still have lower highs. And I want to talk about gaps for a second. Today, if you notice, in the market, if you look at like the Dow, for example, we gapped under the 50. So see how this was support, 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 resistance, resistance, until we got over it, and then it was support. And you see how big of a move this is once they broke it, right? So we just gapped below it, started to get up, and got rejected by the 50. This is on the Dow Jones, DIA, but SPY is basically doing the same thing. They gapped down, started to bounce, and then just gave it up, right? And this kind of candle is not a strong reversal candle. If you look at this, you have to have multiple things come into play you got to have volume for one, right? So this kind of volume is what turned the market around. That volume right here is the same volume as what's been going on. There's no reversal volume. That's not a reversal. It's a continuation gap. Right? I'm just kidding. But what I'm saying is that's extremely bearish, because when you gap away from things too, it's important because it means I'm done playing in this area. I want to move on. So if you look here, let's kind of move back for a minute. So we had this huge run up. They gapped up and they said, okay, I'm done with this move. On to the next move. What's the next move? Consolidation sideways, right? They started to move a little higher. They gapped down with that. They're done with this move. They gapped away. They moved to this one, consolidated, right? Gapped down under this, started a new bear trend. Gapped away from this, started a new bull trend. So if we consider this consolidation and they just gapped away from it, then it doesn't matter how high we get tomorrow, as long as we don't take out that high, we've started a new bear trend, right? It looks a little more, let's look at QQQ. See, QQQ is still holding, and but then again, we know the only reason the stock market has been bullish is because of like two stocks, Apple and Nvidia, right? The rest of the market looks like junk right now. So, but see how this like gapped down, and then they gapped down and they moved away and they started a new trend. Even though they came back up and retested, they gapped down means I'm done with this move, I'm moving on to the next move, right? So what I'd like to see, same thing with here, they gapped up, they said I'm done with the up move, I'm going to start a new trend. What I'd like to see is a major gap. Open up Monday down here and say I'm done with this move, I'm on to the next move, right? So I want you guys to say small accounts. I heard some people talking about I don't have enough capital to make any money, and that's true, and that's why we're only making $50 a day, because eventually $50 a day adds up. I don't know how much I made today. I think it was $41 in our Robinhood Lotto account, right? But I want you not to get in at the open if you have a small account, unless for some reason we're like really gapped down. Like if the S&P for some reason is below 4,000, then I would consider this. See, even here in the ES. Now this is interesting because futures markets usually don't gap. Like they're really smooth. You can consider this one a gap, and that's what ended the move. But usually they overlap. All these candles overlap because they're futures. They're only open for an hour, right? Well, we had a gap here. I guess it kind of refilled, so that's still there. And then we had a big gap down under the 50. And we came back and we're retesting it right now in futures. But that could be a warning sign that SPY is and Dow and QQQ are moving away. Another one to look at is small caps. If you look at small caps, zoom out here, they look totally different than the S&P, right? The S&P looks more like this kind of thing, and they put in a reversal off of this thing, and they're starting to curl back up, right? Small caps, which is considered growth stocks or risk on stocks, those are breaking out of the I don't know why my lines are all messed up, but those are breaking out of the bear flag here, right? They broke out and then they retested it and they're failing. So this should be a warning sign that there's no money flowing into the market right now. They're flowing into two stocks. That's Apple and Nvidia, and that's because those are the most shorted stocks in the market right now besides Tesla. And that's the reason Tesla won't fail, because there's too many shorts, and shorts ruin everything. But anyway, I just want you to look at this and say, this is not bullish behavior. QQQ might look bullish. It's filled this gap, so that job's done. Actually, now they're done. They've completed every move, so they could fall. They've got a trend line, just like SPY. So, gapping below this, breaking below this on a Monday, So anyway, that's what I want to talk about is save some money, because at the end of the day, we're going to look at it and say, okay, is the market done? Do we need to swing puts for the crash, or are we still going to chop for a little while longer? That's about all I have to say. I don't know why my lines got all messed up, but anyway, just keep note. If we're up here, probably 407. If we continue to get rejected on this 407 and even higher, this area here, what's this? 408. We don't have a line there, but still 408 area of rejections lining up with this 50. That could be a sign that we don't have enough strength to get to the top of this channel, this trend, and we need to look for a move like this. One last example of that would be PNC, just to kind of reiterate. So you can see we've been in this channel. I don't know if I talked about this already or not, but we've been in this channel forever, and on this day somebody decided, I'm done playing with this junk, I want to just move. And so they just gapped away from where it was in an uptrend, and it just gapped away and moved down. And they're like, the play is dead, there's no more liquidity, we're done. Right? If you look at oh no, hold on, let me go back. So here's the same thing. So today, here's what happened. We've been chopping in this market, right? We had a reversal volume right here. We came down, they said, okay, we're falling, okay, we're going to stop falling. This move is done. The volume came in to push it sideways. We've been consolidating for a few weeks now, over a month, right? We've been consolidating, waiting for this 50 to catch up with us, and then the institutional sellers can start coming in and pushing it down. And this morning, we had a gap down. Actually, last night, we gapped away from this area. Now, they came back up and they retested it, and they actually hit our number, 415.32, I believe is what it is. Yeah. They hit our number and rejected it multiple times, which I thought was pretty cool that our numbers work. 1, 2, 3, 4 times it rejected that number. But the main thing to keep be aware of is collectively the institution said, okay, I'm done consolidating, I'm ready for my next move. And because we didn't have huge volume like this, to me, that doesn't mean that's an ending move to shoot us higher. That means that's a continuation move for the next leg down. So 94.50 is our next level for PNC swing puts. We're in 519, and ultimately our goal is to break COVID lows and look for a financial crisis. 78 bucks. That'd be a pretty legit move, and especially if PNC is, which is the weakest of all the stocks, if you compare, like, for example, here's PNC on a weekly chart. Here's JP Morgan. They're in an uptrend. BAC, they're starting to break down a little bit, but still kind of in a consolidation area, an area of support. BAC is. PNC, they're just giving it up. So to me, that says, okay, this is going to be the first. This is relative weakness. This is going to be the first bank to go. They gave up their COVID highs long ago. Now they're testing COVID lows, and you could get a move like, let me make this bigger. If you look at this move from $75 to $7, so it lost 90% of its value. So PNC is the first one to go bankrupt, let's say they go from 130 to 13. I mean, that's going to be a heck of a return on $20 put options, right? There's 17 would be realistic. 13, 17 to 7. So I mean, that would be a heck of a payday, right? You've got a trend line to be aware of. You could say 2009 lows to COVID lows. The second we break that line, it's over. And this is going to be a $10, $15 stock. $115 right now, and it'll be a $15 stock. You don't have to believe me. But anyway, that's all I wanted to talk about. Hopefully that was clear enough that you got some idea. Save some money, small accounts for the end of the day. We will likely grab some SPY swing puts, and really DIA I think would be a better deal than SPY. We'll see what the option prices are, but they've already got a lower low, so, and lower highs. So DIA is probably actually going to be the first one to take the biggest hit. Now Dow, the biggest stock in the Dow is Apple, and as you can see, trend line, they broke above it and they failed. That's at like 168. So if they can recover it tomorrow on this options thing, not options, on this earnings thing, if they can recover this falling trend line, which they have, then they can still save it, and they can break out above that, find some support, and take off. And then we all just get tricked and just keep pressing higher. But watch for an alert for swing puts at the end of the day, or maybe around the middle of the day, something like that, for a move down to new lows and a recession to begin. They might announce it on a Sunday night, and then it's too late to get in, right? We'll know because we'll get a big gap down. If you look at COVID, I go way back here. This is what I'm talking about. So the market's moving along just fine in a bullish trend, whatever, and then just murdered, right? And that kind of move, 5% gap down, would be the nail in the coffin for the recession to begin. So look for this kind of move on Monday. That would be very interesting to open up and be below 4,000 on a Monday. That could be it. So we're at 40. Well, this is SPX, but it's very well possible, that we just gap down and just give it up. So I thought this was it when we had this channel up here and we gapped down and then we started to lose it, and they recovered. So we'll see. It might not be time yet. I think the Fed has another interest rate hike coming up, but don't be surprised if we're at like 3,500 by the next FOMC meeting. Let me know if you have any questions. Thanks.